I always want people to do what's best for them, but I want to educate homeowners because a lot of times homeowners just don't know. And what they don't know leads them down the path of either losing their home or taking pennies on the dollar for their home, or being in a situation where they're left without any viable options for how they move forward.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owners Association, where real estate investors have found success since 1968. I'm your host, Brian Hamrick from Hamrick Investment Group. This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 432. My guest today is an expert in foreclosures and will be sharing tips on how you can craft a foreclosure strategy when working with owners who find themselves in that distressing situation. DJ Olojo is a real estate investor, realtor, and author of the book, The Foreclosure Fix, 12 Proven Steps to Beat the Bank, Escape Foreclosure, and Turn Your Property into a Profitable Asset. Based in Atlanta, DJ has a mission to help 1 million homeowners navigate foreclosure. DJ, welcome to the show.
Thank you so much for having me, man. I'm super excited to be on, and it's really a privilege and an honor. So thank you.
Fill us in a little bit on how you sort of started investing and then got involved in the foreclosure space.
The way I started investing is that when the housing market was in the toilet, me and a group of buddies said, let's buy some houses, from the foreclosure courthouse steps. And as you can imagine, 5, guys who are in grad school and just working their first jobs, we all didn't have a ton of money, but we all tried to pool in some money to go buy a foreclosure property. And lo and behold, that did not work out because somebody had to sign off for the loan. And the person who was going to sign off for the loan asked his dad if that was a good idea. And his dad said, "Why are you signing on a loan for 5 other people? It sounds like you want to be in foreclosure in the future," right? And so that fizzled out. But one of my buddies kept going, and he actually stumbled across buying properties at the courthouse steps in Georgia. And so the way the foreclosure auction works in Georgia is the first Tuesday of every month across all the counties in Georgia, they have a foreclosure sale. And that foreclosure auction, you got to bring certified funds and you can go buy houses. And in my experience, I've seen houses sell during the crisis for as cheap as $1,000. And so that was my first experience, is being on the courthouse steps in Atlanta and watching other people bid and buy houses. But one of the things that kind of really struck me there when I was at that foreclosure auction, my first one, is that I saw a couple there, and they were a husband and wife, and they were pretty much just begging all the investors not to buy their house. And so at that time, I didn't really know what was going on. I didn't know if this was normal, if it was abnormal, or if it's just what people would do. But it just seemed weird to me that you would come to the auction, which is the last and final day, to try to save your house by begging people not to buy it. And there had to be an option available for homeowners who are facing foreclosure to be able to navigate that situation. And so that kind of just led me down the journey of real estate investing, me buying foreclosures, renovating them and reselling them. But then also the other side of that is trying to understand how to help homeowners who find themselves in that predicament. And not just homeowners, but investors as well, because when everything's flying high and things are going great, we're not worried about bad things. But when bad things happen and life hits us, what do we do? And that foreclosure spot is where I found my sweet spot.
You said the Great Recession. So you started investing back in like 2008, 2009?
It was closer for me to that 2009, 2010 frame, closer to that time when we started investing. And I don't think I bought my first property on the courthouse steps to maybe closer to that 2011 time frame. I get the dates mixed up, but it was around that time frame.
All right. I want to dig into everything you just said, but the couple on the courthouse steps that were begging people not to buy their house, what did they think they were going to accomplish by that? And was anyone able to help them out?
No one was able to help them out. But for me, what I saw in them was desperation. And I saw that they had come to the end of the road. And in a last ditch attempt, they wanted to just share, like, please don't buy my house. Please don't buy my house, to gain more time, to buy more time, to try to figure out a solution with the bank. And it's not really into the last maybe 5 years or so that I really began to understand exactly what it looks like to be the bank. Because for most of my investment career, and I've been investing for probably about 15 or so years at this point, I was on the front side of it. I was trying to buy the house. I was wanting to renovate the house. I was the landlord. And then in the last 5 years, I have become the bank. And so we also buy distressed debt and things like that. And so now I understand the vantage point of the bank where you buy a delinquent loan expecting to get a certain yield or return, and you are doing everything in your power to try to communicate with the borrower. You're sending letters from the attorney. You're sending packages to say, hey, we'll modify the loan. We'll do different things. Your servicer is calling them and they are just ignoring you.
I want to get into that, but I want to talk about the first half of your career. So DJ, the first half of your career there, investing in foreclosures, it sounds like you were kind of helping the homeowner or working with the homeowner on their side. Can you talk a little bit about that?
We were doing both, right? We were helping ourselves and because we are entrepreneurs and capitalists. And so we were buying at the courthouse steps. And when it gets to the courthouse steps, it's done. It's the foreclosure sale. You're buying a property. And a lot of those properties were vacant because we didn't want to buy properties with people in them because of because of evictions and stuff like that. So we were buying vacant property. But along that path, we started actively communicating and proactively reaching out to homeowners who we knew were facing foreclosure. And that's where a lot of the strategies in the book came from, is when you started working with homeowners before the foreclosure to help them save their houses. That's when I began to really understand, how do you work with the bank? How do you evaluate a situation and determine the best solution for the homeowner or the investor who is facing foreclosure, and deciding what they should do next and the best way to move forward to accomplish the goal they want to accomplish.
So give us some insight into the two conversations that I'm hearing there. One is with the homeowner to talk with them and see if there's a solution to be worked out. And then the second conversation is with the lender. So talk about the homeowner conversation first. How did those typically go?
So the first conversation what I have with the homeowner is, I want to understand the big question is, do you want to keep your house or do you want to sell your house? Because depending on which way they want to go, that is going to dictate the strategy. And depending on if their house has equity or not, all those different variables go into what's the best strategy for them. And so when you ask that question of, hey, do you want to keep the house or do you want to sell the house? That allows you to understand the insight of that person. And that question is so telling, because a lot of times people do want to keep their house. They generally want to stay in the home. But then when you go see the house or you talk to them about the house has lots of problems. They don't have enough money to sustain the house for the long term. And it actually makes better sense for them to let the house go. But if you allow them to tell you what they want to do first, it then allows you to give them options to help them the best way you think they should be helped. But then it also lets them come to the self-realization of, maybe I won't be able to keep this house. And when they come to that realization, it makes it a lot easier for you to transition the conversation from, I want to keep the house, to now it's probably in my best interest to sell the house. And it doesn't necessarily mean selling the house to me. It could mean selling it on the open market. It could mean selling it to their son, their nephew, their family member. But it just means that they have come to that realization and they are okay with moving forward.
How much patience does it take on your part to give them the time to come to that realization?
Well, it just depends on where you meet them in the process. So it depends on the state they're in, both mentally and actually physically, what state they're in. Because if you're in a state like Georgia or Texas or things like that, where the foreclosure timeline it could be a couple months, well, you don't really have that much time to process, right? You gotta make some plans. But if you're in a state like a New York or Hawaii, where it can take 3 years to foreclose on somebody, then you have a lot more time to go through that process in your head mentally. But for me, the way I approach it is that I look at it as, I'm trying to always help the homeowner. I'm a small shop. I'm not a huge investor. So I'm not buying hundreds of houses a year. I may only buy 20 houses a year. And so, but I'm talking to, maybe 1,000 people plus in a year. And so I know that I can't even buy all their houses. And so when I have conversations with folks, I go into it with the mindset of, hey, how can I help you be better from us talking or us discussing or us meeting than you were before I met you? And usually what happens to that is that I give people a lot of information. I help them understand their options. And from there, they begin to make decisions. And when they want to make decisions that involve selling, they typically call me first. And if I'm not the best offer or the highest offer, I always tell them, you take the other offer. You need the money more than me. And so I always want people to do what's best for them. But I want to educate homeowners because a lot of times homeowners just don't know. And what they don't know leads them down the path of either losing their home or taking pennies on the dollar for their home, or being in a situation where they're left without any viable options for how they move forward.
Let's talk about the other conversation you have with the lender then. How does that typically go?
So the conversation with the lender is all based on what the homeowner wants to do. So if the homeowner wants to save their house, there's a couple different options that they can go about doing that. You have reinstating the loan, you have paying off the loan, you have modifying the loan, and then you have the nuclear option of bankruptcy. And so it's really about saying, lender, hey, I have a seller or I have a homeowner who really wants to keep their house. What options do you have available? And depending on if it's a government-backed loan, like a FHA loan, there will be government programs that are mandated. But if it's a private investor, well, that may be a different conversation. But the beauty of the situation is that when you begin to open up the lines of communication, you can get results for homeowners. But it really depends on how late it is in the process. Because if it's too late in the process, then the conversations kind of end because the lender has already exhausted too much of their capital and they just want to see a resolution with it being a payoff or foreclosure. And so it's just all about where you find the homeowner, understanding what the best solution is for them along the path they're going. And if it's earlier in the process, the better. But if it's later, then you only have a few options at your disposal.
Give us an example of how you took a property through this process with the different conversations, the situation that they were in. Give us some rough numbers and how that situation turned out. And I want to stick with the kind of the first half of your trajectory, and then we'll talk about the second half after that.
There was a property that was going to foreclosure auction in Georgia, and the foreclosure auction was probably about 3 weeks away. And so we reached out to the homeowner and just said, hey, do you know you're going in foreclosure? Right? You know what I mean? And they said, yes, I know I'm going in foreclosure. I've been dealing with this a long time and I really would like to keep my house, but I don't think I'm going to be able to. And so we evaluated the property and we just had a conversation. And that conversation is getting a better understanding of them, understanding kind of what happened, what do you want to do, and what's your plan to move forward, right? And so we had that conversation. And from that conversation, we said, this is what you need. You need to get a reinstatement so you know exactly what you need to pay. And then you also need to get a payoff for your mortgage. And so she was able to procure those things from her servicer. And when she saw what the reinstatement amount was, it was significantly more than she could come up with.
Explain reinstatement amount. What is a reinstatement amount?
So a reinstatement is basically when you have a delinquent loan and you haven't made your mortgage payments for numerous months. The reinstatement amount basically is the amount you need to pay to bring the loan back current. So that would include your principal payments, your interest payments, and any late fees or attorney fees that have accrued since you stopped paying. And so in some scenarios, I've seen reinstatements as high as hundreds of thousands of dollars, and I've seen them as low as just $2,000 or $3,000. And so it just really depends on how delinquent the person is, how large the mortgage is, and how long it's taken the bank to be able to get to this point. And so, but her reinstatement amount was probably around $15,000, but she could not afford the $15,000. Number two, the house was in disrepair. It was almost as if it was almost unlivable. And so it was not in her best interest to continue to stay at the house. The last thing this person had going for them is that she had the opportunity to move somewhere else with her family that was going to be significantly cheaper, safer, and she was going to be around her loved ones. So in this scenario, we just said, hey, if you want to keep your house, please keep your house, but you got to reinstate. And so where are you going to get the money from? And she really couldn't answer that. And then we were like, okay, and if you don't do anything, you're going to be in a situation where you face foreclosure. And if you face foreclosure, you get nothing. And so she was able to think through that process, and she had equity in her home. And so we were able to structure a deal where we paid off the mortgage, bought our house, gave her numerous months in the property. I think we gave her another, 60 days to live in the property to transition. And she was able to get some of the equity out of her house. I think she walked away with, $15,000 or $20,000 in her pocket to be able to go and transition. So she went from a position where she was losing her house, facing foreclosure, to being in a situation where she left the property with $15,000 to $20,000, being able to start afresh in a new place with her family in a better environment. And so that's the type of win-win scenarios you can see. Now, if you take that same person, if she would have done nothing, she would have been in a situation where she had no money, the house would have been foreclosed on, and then the sheriff would have been the one helping her move away from the property. And those two scenarios for that person are life-changing difference. Being able to restart with a large sum of money or being kind of kicked out and not knowing where you go next. And that's the thing for homeowners or investors who may be facing foreclosure, is that in today's environment where you have so much equity in the properties, oftentimes there's a way to create a deal or structure a deal where everybody can win. The homeowner can win, the buyer can win, and the bank can win. And that's what we always try to look for when we try to build strategies and solutions for homeowners facing foreclosure.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. How did you win in that situation? Like, how much did you pay her to buy the property? And then what were you able to do with it after you took possession?
Again, I got to get the numbers straight because I don't have them in front of me, but I'm using round numbers. I think we paid somewhere in the neighborhood of $150,000 for the property, right? And that property needed about another $50,000 in renovation. And then we end up selling it for maybe around $235,000 or $240,000. So after agent fees and commissions and things like that, we made about a 10% return on our investment. And so for us, that's a win-win. The seller walked away with, $15,000 to $20,000. We walked away with about $20,000 to $25,000, and everyone won.
Talk about the second half, because you've kind of changed your business model over the past year. So why don't you fill us in on that?
I'm still active in the fix and flipping space. However, I've just added another layer to the model, which is the non-performing note side. So a lot of times when people talk about the bank, they always think about the big banks, the Wells Fargos, the Bank of Americas, the larger banks. But investors can be banks too. Hedge funds can be banks too. And you out there could be the bank as well. And so there's a market out there where you can actually buy performing and non-performing notes. And this institutional grade paper originated by big banks that is now delinquent. And a lot of this paper, the banks may not want to foreclose on themselves because of the headline risk. And you can now step into the situation where you can be the bank and help homeowners get to win-win solutions, where you win as an investor because you're buying these notes at a discount, but then you're also able to listen to the homeowner situation, help them, and put them in a situation where they can modify the loan to a payment that they can afford, and then you can get a good yield on your investment. And so we've been doing that for the last 5 years, and we've been really able to help a lot of homeowners along the way modify their loans, reinstate, or even pay off their debt. And what we do is we don't only just say, can you modify the loan and pay this amount, but we also try to look and see what programs are available from local governments, municipalities, and things like that to be able to help them maybe come with the down payment assistance or with the reinstatement amount, or take any advantage of government funds or nonprofit funds that are available to help homeowners in need. And banks just don't have the time to do that because they're just so inundated.
Well, and banks also, they have to deal with every lender in the same way. They don't have the flexibility often to help the homeowners in their situation. I want to make sure our audience is tracking what you're talking about, because it actually is a huge difference. And now you're still buying the property through foreclosure, but you've also transitioned to buying the paper. And I want to make sure that our listeners understand that there's a big difference. There's the physical property that you started off acquiring through the foreclosure process, but now you're buying the paper, which is the loan that is on that property. So where are you finding these loans? Like, are you just going down to Bank of America and saying, hey, show me what you got today? Or how do you actually find these?
I wish my bank account was big enough to be able to do that. But if you're going to Bank of America talking about, I want to buy some loans for you, you got to have a bank account with hundreds of millions, if not even billions of dollars, right? And so I'm a small fish in a huge pond, and I'm not even a fish. I'm probably a minnow. So, you know what I mean? But long story short, no, I'm not going to big banks. What happens typically is that a big bank, like a Bank of America or something like that, will sell it to a bigger hedge fund. That hedge fund will sell it down, and just kind of go down the food chain from hundreds of millions to tens of millions to hundreds of thousands to, tens of thousands. And so I'm towards the end of the food chain. And so I'm buying from individuals and individual companies who I've met in the space who do this. I'm also buying from different sites like PaperStack and things like that. And PaperStack's a website online that you can go on and you can see notes on there. But I'm buying from smaller individuals and smaller players. So it may be a hedge fund that is a $10 million hedge fund or a $100 million hedge fund, and they want to sell paper to recapitalize. And so I may go buy a note for $100,000 or $50,000 from them, and I'm buying one-off notes or small pools versus they are buying it by the tens of millions of dollars. And so that's how that industry works. But to your point, I have transitioned from not only being kind of a landlord or a property investor to what people call being the lien lord, which is when you own the paper on the property, you don't have to deal with the tenants and the toilets and things like that. You were just dealing with payment streams and hoping that the person who you are reaching out to or the individuals who signed the note and the mortgage or the deed of trust are going to pay you as they agreed to pay. And the beauty of it is that you can buy performing loans, which are people maybe like you and me who may have a mortgage on our property, who have it on auto debit, who pay like clockwork. And you can say, I'm buying a performing loan and I'm trying to get an 8% return. And they just pay and pay and pay and pay until one day they pay off. Or you can buy non-performing loans, which is loans that you get at a deeper discount. And those are ones that you have to kind of work out. And that workout strategy may be to modify, reinstate, or take it to foreclosure. You just don't know, but it's a non-performing asset. And so you are buying a level of risk, but it could also be very fruitful if you're able to get to a resolution that is favorable for all parties.
Take us through a scenario that you've encountered. Like give us a specific example of one of your notes that you've purchased.
This is a recent example that happened to me. And I always like to share the real life examples because I think a lot of people come on podcasts and they go on all the social medias and they talk about their highlights. But I think, with my book and everything else, I always like to talk about the lowlights because, life happens to everybody. And so I bought a note 2.5 years ago, and this was a non-performing note. And I buy both non-performing first loans and non-performing second loans. And so when you think about a non-performing first loan, it's a first position loan. It's the first mortgage or deed of trust on the property. But the second position one may be like a HELOC that comes behind the first, or it may just be a second loan that was created. And so you are in the second position. So that means if the first mortgage forecloses, that means you get wiped out and you get nothing. And so I bought a non-performing second mortgage, and this was about 2.5 years ago. And we started the foreclosure process. We tried to work it out with the borrower. The borrower was not interested in working it out. And so we started the legal process. This was in the state of New Jersey. And so that foreclosure timeline is a little bit lengthy. It's a judicial process. And so it went to foreclosure sale after about a year, and it sold at foreclosure sale. But the person who bought it at foreclosure sale didn't pay. And New Jersey's a state where you only have to put a small deposit down. If you don't pay, you just lose your deposit. And then it went to foreclosure sale again, and it didn't pay. And then it went to foreclosure sale one more time, and it didn't pay. And in that timeline, the first mortgage was also going through their foreclosure process. And over the course of that time frame, with people not paying but buying the loan actually got wiped out. And so the first mortgage went to foreclosure, and they were able to recover their principal, but there was no overage left for me. And so I basically just lost $50,000 on that mortgage note. And so that's a real life example. When people talk about, it's all roses and sunshine, that's me losing $50,000 of hard cash over the course of 2.5 years.
That's painful. I'm in that space too. So I've seen some real successes, and I've seen situations like that as well.
Exactly. But, on the other side, there have been times where we bought a loan that had a balance of maybe about $30,000. And we were able to buy this loan at a discount for $15,000. And so that's a 50% discount on the face value of that loan. And this house was vacant. It was a couple who were deceased. And so we knew we were going to have to take that property all the way through foreclosure. And so we went through the foreclosure process, and the property did not sell at the foreclosure sale. And so we got a property back with a balance of $30,000 that we only paid $15,000. After all the legal fees, after everything, we were in it for maybe about $25,000. And then we took the property to sale and ended up selling for $45,000. And so on that property, we were able to make $20,000 on our investment. And so you have situations like that where you were able to make, a pretty solid return, almost, that's, I think, around 80%, return on your investment over the course of a year time frame. And so it's not necessarily a bad industry. It's just an industry where you really have to understand that there are risks and there are pros and cons, and that you just have to be really diligent in your due diligence. And you have to make sure that you're buying paper that is going to put you in the best possible position.
Tell us a little bit about your book and why you wrote it.
So the Foreclosure Fix was a book that just came out of a need and desire to help more people. Me and my wife kind of share an office from time to time, and she'll hear me on the phone talking to homeowners, and she'll say, you get really excited when you're talking to these homeowners. But what I find myself doing is that I didn't really have enough time to have this conversation that I have in the book with tens of thousands of people, right? You only can talk to so many people in a given day. And so I want to kind of write down the strategy and the tips and the tactics that I've been telling folks for the last, 10 years or so to be able to navigate their foreclosure experience and their foreclosure journey. And so this book is a culmination of all those different conversations. It's a culmination of all the strategies I've seen work and of all the things that I think homeowners and people facing foreclosure need to know in order to navigate the process successfully. And when I say navigate the process successfully, it doesn't mean that you always keep your house. It doesn't mean that you always sell your house. It means that you dictate what happens and the bank doesn't dictate what happens. That you leave on your own terms or you stay on your own terms, and you are the master of your fate. And that's what the book is all about, is empowering homeowners to do what's best for them in their current situation.
And is it for homeowners who are in foreclosure, or is it also for investors who are interested in this space?
It is for both. It is for homeowners to be able to understand their options, their steps, but it's also for investors to be able to understand what options they can bring and what value they can bring to homeowners facing foreclosure. Because believe it or not, a lot of investors don't know about the foreclosure space. If it's just a straightforward buy and sell, they're all over it. This is what I can pay, and that's that. But when they get to situations that are a little bit more hairy and that have more layers to them, a lot of them don't know about them. And so just really educating them. And for real estate agents and just real estate professionals who want to be of value to homeowners homeowners who find themselves in a difficult space.
How would people find out more about you or get a hold of you?
The best way to find out about me or get a hold of me is to check me out at the foreclosurefix.com. I'm on all the social medias at DJ_Olojo, and you can reach out to me directly. In addition to that, if you're listening to this podcast, you gotta like and subscribe. He's been doing this for almost 500 episodes. He puts out quality content. And if you haven't liked and subscribed, you're doing yourself a disservice. So please make sure you do that for Brian and the team over at this podcast.
What is your favorite hack or app?
My favorite hack or app right now is a new app I just found out called BuildBook. And BuildBook is a project management and construction app. So it's kind of built for general contractors who are running projects. And so in the last few years, what I found is that my construction costs have been significantly higher than I would like. And so I have been on a rampage trying to figure out how to get my construction costs down. And so that app has been really helpful in helping me think through projects completely from the start to the finish. Also making sure I'm not losing time by having dead days, but then also helping me order material in bulk because I know exactly what each project needs down to the amount of hinges and doorknobs and everything else. And so I can order in bulk and get better discounts versus having just to go to the hardware store and get whatever is on the shelf. And so that's been a real hack that I've recently started using to really help streamline my processes and allow me to spend more time doing what I do best, which is helping homeowners facing foreclosure.
That's called BuildBook, BUILD book.
Yep, BuildBook. And it's an online software. It is a subscription model, but it's relatively affordable in comparison to some of the other giants in the space. And it's user-friendly. They have it in an app online, and it's just really a great piece of software for those folks who are doing multiple renovation projects a year. It just helps you keep everything organized, helps you keep pictures and daily logs and all that stuff. It's been really helpful to me and my team. And we just started using it kind of almost a month ago. And it's been really great.
DJ, I want to thank you for coming on the show and sharing your insight into foreclosures with us, both the way, how you kind of got started buying at the courthouse steps, how you're able to work with people who find themselves in a foreclosure situation, and then how you also negotiate with the lender. And ultimately, how you've kind of also brought into your business model the idea of actually buying the paper, purchasing the note itself. A really fascinating conversation. Thank you so much for having it with us today.
Thank you for having me on. And again, I appreciate you and hope you have a great rest of your day.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's HIG investor.com.